Hey guys, welcome back to the channel. I've got a quick crypto and market update for you. If you like the content we do here on this channel, please consider liking and subscribing. Let's get right into the video. Bitcoin fell to its lowest in 3 months yesterday on Sunday, days after crypto analysts warned that charts were indicating bearish signals. The Bitcoin price was around $33,050 as of the recording of this video, down 3.8% over the past 24 hours. Now, this is the fourth straight day that Bitcoin has fallen. Early Sunday, the king of cryptocurrency dropped to 33,710, the lowest since January 24th. Now, if the price falls below 32,951, it would hit a new low since July of 2021. Bitcoin had stayed mostly between the $35,000 and the $46,000 mark for the past couple months, so the latest price drop could possibly mark the beginning of a new trend in the market. Price chart indicators were looking rather bearish late last week as Bitcoin's price broke below the 3-month rising trend line. Ethereum is also down 4.2% to $2,380, its lowest price since January. The raising of interest rates by the Federal Reserve 0.5 percentage point last week, as well as Wall Street responding with a stock decrease, crypto markets have also followed close behind, dropping more than 10% or almost $200 billion over the last week. Senior market analysts note that crypto markets had shown correlation to indexes like the Nasdaq. The tech index is down 21% this year, while Bitcoin is down 22%. Confidence seems to be low, and Bitcoin has been mainly consolidating for most of this year so far. Bitcoin always appears to get stuck in an uncertainty in the news cycle, and institutional investors will just have to wait for the calm on Wall Street, and then you'll see more people confident in investing. If you look past the volatility, as Michael Saylor stands by, there's a lot of long-term value here. A U.S. Labor Department report Friday showed a strong growth of employment last month, at a level that should cause the Federal Reserve concern about the jobs market being rather tight. As more employers compete for workers, wages may start increasing, adding to the ever-growing pressure of inflation and forcing the Fed to tighten the monetary conditions more aggressively. Recently, Bitcoin, as well as stocks, have had more of a negative effect because of more aggressive actions by the U.S. Central Bank. Now, some stock and crypto traders may have been shaken by the data showing that Terra blockchain's stablecoin UST briefly crashed on Saturday. The Luna Foundation Guard, which maintains a fail-safe reserve that activates if the stablecoin falls below $1 and holds about $3 billion of Bitcoin as of last week. Now remember, Bitcoin's price reached an all-time high in late 2021 at 69,000. So a price drop below 34,500 represents a correction of 50% or more. As you may have heard, circumstances have locked the Federal Reserve and the U.S. inflation in a race to see who can be the most hawkish, but the Fed always seems to be playing catch-up. The ability of central banks to lean against inflation effectively remains a significant source of contention as investors weigh greater near-term policy certainty against medium-term inflation uncertainty. The longer this goes on, it will drive even higher investor anxiety levels and pressure stocks to lower. The release of the jobs report did little to move the dial ahead of the release of the Consumer Price Index, which economists' projections suggest that we could see a year-over-year increase of 8.1%. If this is the case, it would mark a slight slowdown from the 8.5% increase seen in March. This follows a mostly rocky start to May for stocks across the board. At the end of Q1, financial markets seemed to be pretty normal. Even though the Federal Reserve made the move towards tightening the monetary policy, along with the Russia-Ukraine conflict increasing an already high inflation. The Fed appeared to talk a big game, and investors seemed to heed the warning. The S&P 500 dropped 4.6% in the first quarter, tumbling 9% in April, the worst month since March of 2020. May is starting to show some optimism, even though the European shares remain under pressure and futures indicate the U.S. equity market dip will more than likely drop when the New York Stock Exchange opens today. We're going to be keeping an eye on this. Comment down below what you think this next week will hold for crypto and stock markets. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.